Hello. You're on the RoboMarkets YouTube channel, and this is our brief market analysis for the week of May 26th to June 2nd, 2022. Don't forget to subscribe to our channel for more. Today we will focus on the shares of Snap, NVIDIA, and Tesla. Let's begin. Snap. Snap stocks suffered a steep decline of almost 43% on Monday 23rd of May, after the company's CEO, Evan Spiegel, published an internal memo to staff indicating the potential slowdown in growth in the next quarter. Spiegel was honest and brave enough to clearly describe what is happening in the social media industry and how this will affect Snap. He declared that the company most likely won't be meeting its own estimates for revenue and earnings growth due to a significant decline in ad spending, which was driven by the rising interest rates, inflation, and the unstable political situation in Europe. Snap's CEO memo caused a tech stock plunge, dragging down stocks of other companies that are hugely dependent on advertising-generated revenue, such as Pinterest, Google, and Meta, although their decline was not as significant as Snap's. At the moment, the nearest support level for Snap shares is at $10, and the resistance level is at $25. NVIDIA published its quarterly results on Wednesday 25th of May. The numbers were strong, but the guidance for the future did not meet Wall Street expectations. However, the company reported an impressive growth. Its data center sales were up 83% and gaming revenue increased by 31%. Also, despite the current challenges linked to supply chain disruptions, NVIDIA was able to effectively manage its costs. The company's CEO, Jensen Huang, was enthusiastic about new NVIDIA products coming to the market and their potential to advance the AI, graphics, Omniverse, self-driving cars and robotics industries. Despite this statement, NVIDIA management noted that there are still macroeconomic factors that can negatively affect the company's sales results in the next quarter. At the moment, the nearest support level for NVIDIA's shares is at $160, and the resistance level is at $200. Tesla. Tesla is currently in a strange position. On one hand, its shares are down more than 40% from their all-time highs. Apart from the COVID-related lockdowns in China and component shortages that have a negative impact on the whole sector, Elon Musk's Twitter crusade is still affecting the stock. What's more, the exclusion of Tesla's stocks from the S&P 500 ESG index does not give investors any rational reason to remain loyal to Tesla. On the other hand, the company is still leading the market of electric vehicles with its brand equity and sales performance that follows. At the moment, the nearest support level for Tesla shares is at $600, and the resistance level is at $800. What do you think about these price movements? Please leave your opinion in the comments. See you next week with more market analysis.